In this short video, I'm going to share with you how to find motivated sellers of below market value properties in today's market. Hi, my name is Mark Lloyd. I'm co-founder of Property Master Academy and I've been a property investor for over 17 years. If you haven't already done so, please subscribe to our channel and hit that bell icon so you get notified as soon as we upload new videos. So firstly, you need to start out with the right mindset for below market value properties and looking for motivated sellers. The key thing to realise is that there are always motivated sellers and below market value properties, whatever the market's doing and in any market condition. The property market is not like some other markets, as there is no central body that sets the market price, like a stock exchange for example. So therefore, there is no predetermined way of knowing what a property will sell for, as it's determined by mutual agreement between a buyer and a seller. And since every buyer and seller are completely different, you'll get a completely different price outcome for each negotiation. Now, most residential properties are owned by owner-occupiers, and they're driven by all sorts of emotional reasons for wanting to sell or trade up or trade down a property. And when you get emotion involved in any selling or buying decision, then you get even more anomalies. Remember, if you're buying your own home, then you're often paying a retail price for your property. In other words, you're paying market value. But you are in the property business. And when you're in a business of any kind, you don't look to pay retail price for your raw material. You're looking to pay wholesale price. And most people make the mistake of going out and looking for below market value property. You're not actually looking for below market value property. What you're looking for are motivated sellers, and that is the real key. Motivated sellers are those people who are motivated to sell for some reason other than obtain the highest price for their property. So what you need to look for is the circumstances which give rise to being a motivated seller, and that usually comes down to just 3 situations: death or probate, debt and divorce. So let's talk about each of these individually. Probate or death. Well, in my experience, most beneficiaries have spent whatever inheritance they're going to get as soon as the person dies. But the problem is that they need to get probate first before the property can be sold. So that causes delay, and the beneficiaries are always eager to get the hold of their money. Now with debt, of course, there's been pretty much a moratorium of repossessions due to the pandemic, which has meant that repossessions are or have been running at an unusually low level. Now that things are going back to normal, I expect repossessions to rise this year, so look out for opportunities. As for divorce, there seems to be less of these during COVID as well, but again I expect this to change, and again that will create more opportunities. So these are the 3 classic circumstances which make people want to sell below market value. Now, some of you may be thinking it's a bit mercenary talking about motivated seller circumstances, but that is not the right mindset. What we are really talking about is helping people with a particular problem. And remember, it can take 3+ months to sell a house on the open market, and some people just can't wait that long. Whereas you as an investor can move much more quickly. Now with probate, we can provide a quick sale, which means the beneficiaries get their money sooner. If someone's in debt and you can offer the vendor a deal where they can just walk away and maintain their credit rating, then that is much better for them than often the alternative, which is debt management or even bankruptcy. And both of those will affect their credit record for the next 6 years. If you're coming in as an investor and offering the person who's in debt a deal where they can walk away, maintain their credit rating and everything else so that they can fight and live another day, then do you think that you're likely to get a below market value deal? It's a lot better than being repossessed, isn't it? When you're dealing with couples who are going through a divorce, it's an immensely stressful time. Is that really a time where you want to be putting your property on the market with an estate agent and then having hordes of people traipsing around? No. All you want is a quick solution so you can sell and move on with your lives. In the current market, more than 1 in 3 property transactions through estate agents fall through. And that can add to a huge amount of stress if you absolutely need to sell. The last thing you want is to be stuck in a chain with no end in sight. As an investor, you offer a different proposition. And this is what you have got to get in your mindset. As an investor, of course, you have no sale, and you'll have your power team around you of solicitors and brokers that can help you transact quickly so that you can complete within a quick time frame. And because you're not at the mercy of any downward chain, you can actually transact and do what you say you're going to do. Now, for a motivated seller that needs to sell quickly, that offer is worth its weight in gold. This doesn't just happen in property, but in many other markets as well. The quicker you can move, quite often, the better the discount you will receive. Now, when you're looking for motivated sellers, it's not about being lucky, it's about being consistent. When I tell people about some of the deals I do, they say I'm just lucky. But if you're not finding below market value deals, my first question to you is, how many opportunities are you looking at? What is your pipeline of leads and opportunities? You see, it's all about having a funnel of leads and opportunities that you're looking at each and every month. If you are serious about property investing, and particularly if you're just starting out, it's a numbers game. And you need to have enough numbers coming into your funnel to get enough opportunities. I would suggest that you need to have 50 leads and opportunities coming into your email inbox each and every month. And out of those 50, 1 in 5, so that's 10, will probably meet your investment criteria. Out of those 10, you'll probably see 6. And out of those 6, if you've got that far, you should be making offers on all of them, because everything is worth something at a price. And out of the 6 offers that you make, you'll end up doing at least one deal. You've got to be in it to win it. So if you're wondering why you're not finding those deals yet, then check what your activity levels are. If you're just looking at 1 or 2 properties every month, then it's going to take you a long time before you do a deal. Once you get the leads that match your investment criteria, you'll be seeing more properties, making more offers, and you'll be picking up more deals that meet your criteria. So, there are 3 essential ingredients for getting a below market value deal, and if these are not there, you simply will not get a below market value deal. And this is where a lot of people waste their time. People waste their time on deals and opportunities where just 1 or more of these 3 ingredients are missing. So what are they? Well, firstly, there is motivation. And by motivation, I mean there must be a clear and compelling reason why the seller has to sell. If your sellers just put their property on the market to see what happens or whatever, and it's wishy-washy, forget it. It's just not going to happen. There must be a clear and compelling reason why they need to sell to move on with the next stage of their life. Secondly, there must be a deadline in the near future by which that sale has to be achieved. Now that may be a job move, or they're going abroad and they need to pack up and be out within 2 months. So there you have a compelling reason and a clear, definite deadline when a sale needs to be achieved. And the third ingredient is the capacity to accept a below market value offer. So what do I mean by that? I mean equity in the deal. So if someone's bought a new build property last year, for example, on a 95% mortgage, even though they may have the motivation, even though they may have a compelling deadline, they simply don't have the equity in the deal to accept a below market value offer. However, there may be a possibility of a lease option instead. This is just one of the many tools that can help you provide a solution to their problem and help them move on quickly. So before wasting too much time on any lead or opportunity, you need to figure out quickly whether there is motivation, deadline, and capacity. There are many ways that deals can be structured depending on what the problem is that the seller is facing right now, which will help them and help you achieve a good deal. There is not one size fits all. I often hear about investors trying to make every deal a lease option or delay completion. These are just tools, and like any toolbox, there isn't usually just one tool in it to do the job. There are many. What you need to do first is figure out exactly what the problem is that you're trying to come with a solution, and then apply the right tool to fix it. I hope you're enjoying these tips, and if you are, then please hit that like button as it helps the YouTube algorithm so it's shared with more people like you. Also tell me in the comments below if you have had any success buying below market value properties. Now, the best way to achieve the right solution for the vendor and for you is to meet the vendor face to face and ask about the circumstances behind the sale. Before you can come up with a solution, you need to find out what they actually want. What is it that they're aiming for? So what you might say is, if I had a magic wand, what position would you like to be in at the end of this transaction? This is called an open question. And you'll find that by asking that sort of open question, you'll get to not just the price they're looking for, but what they're actually looking to do after selling the property. And once you know what the seller is looking to achieve by the sale, you can hopefully come up with a solution that is win-win for both. So that's it. Hope that's helped, and don't forget to like the video and subscribe to the channel. Also, there are a few videos appearing on your screen right now which will help you in your property journey. Thanks for listening.